Hey guys, welcome back to my YouTube channel. Today I've got a very interesting strategy for you guys. It's very common, it's very well known. Just a simple support and resistance strategy, and I'm going to show you guys how you can identify your support levels, your resistance levels, where to draw your horizontal lines, how to draw them, and everything you need to know about the strategy. It's very simple. This is also a very powerful strategy. Sorry. Um, so with this strategy, what you need to do first things first, never ever do any markup or analysis on anything smaller than a 1 hour time frame. You need to keep that in mind. What I like to do is I usually like to go on the daily, because the daily is a very strong, not a lot of noise happening, so it's a very clean chart. So the first thing that you need to do is, of course, have your horizontal lines color coded. For example, for me, my dailies are usually black. So what I like to do is I like to keep when I'm drawing my daily support and resistance line, I like to make them in black. You can make them whatever color you want, but just remember the color of the time frame you put in. And your horizontal line must be used as a resistance and as a support for it to be valid, right? So in this case, we have our first major highs in the market, and then we have our second one, which can be right over here because it was used as a resistance, and then as a support here, support, resistance, resistance, support. So this is a very valid key. Third one, we can definitely put one right here. It was used multiple times as both resistance and support, so this is also very valid. And we keep going. Now you don't want to go too much behind, because that's so irrelative to us. We need to focus on what's been happening in the past few months, because this was August 5th, 2020. That's a year ago. So you only need to go that much back. You don't need to go all the way years behind. We don't need all of that data. So you can draw one definitely right there: resistance, support, support, resistance. So that's very valid. Then we have one right here, as it was used as a resistance, resistance multiple times, support here, resistance, resistance. So that's very valid right there. We also have one right here as market rejected and used it as a support here, support, resistance. So that's very valid. And we can drop one at our lowest point right there. That could also be very valid, because you used it as resistance. Maybe support here, we don't know yet. This is where the market is at right now. You can even drop one here just on the lowest point the market was at. So after that, what I want you to do is you can always drop back to the 4-hour time frame. On the 4-hour time frame, I usually just like to look and scope for setups. I like to use the 4-hour. Why? Because it's less fake outs. You don't really get lots of fake outs. If you sold this on smaller time frames, this could have been a clean buy, but then it was only a wick on the 4-hour time frame, and then it sold off. So this is why I like to use the 4-hour time frame for setups. For example, what we have here is a very clean market structure. Now when you trying to look for setups, always pay attention to the market and what type of structure is busy forming. As you see here, we have lower highs, and we also have lower lows, and this could possibly be another lower low. So that's what I like to look for before taking a trade. That's what I like to keep in mind. You always need to trade with the trend. The trend is bearish, so we trade with it, and that's now you only trade against it if you only honestly just scalping. So how you can catch this scalp quick little move, you could have pulled your Fibonacci from previous high to previous low. You could have took it from the 0 up to the 50, a nice scalping position, and then you could have also again completed the whole sell from the break all the way to the next support and resistance line over here that we have. So this is what I like to do. Very simple. I can give you a million of examples. For example, we have a very rejection, and then eventually a bearish engulfing candle formed. You could have took a sell here, and you would have read all the way up. Your first take profit should have been here, and then what I like to do is close let's say 80% of my position, and then keep the rest running in case it wants to go any further. So where we at right now at the market, what I like to honestly see, if the dollar keeps strengthening, which means the euros will be going down against the dollar, right? If the dollar is doing well, which doesn't mean the euro is going bad, is doing bad. It just means that the euro is getting less in value against the dollar because the dollar is doing well. So in this scenario, if the market does something like this, completes the downtrend, and then decides to reject off it, so we would see something like this, and then I would like to enter right here on the pullback before a continuation to the upside. So that's what I like to maybe have. You can always set your alarms. That's a nice little what is this? That's 81 pips. Honestly, this is a very good of you can have a very nice 15 pips stop loss. That's a 1 to 5 risk reward ratio. That's very good. My take profit would probably be here, second one here, and my third one here. I like to split my take profits in case the market decides to, hey, I want it reversed. Always take money off the table, never leave money on the table. Now, however, if the market decides to continue going bearish, what I'd like to see is, before considering taking any trades, is the market breaking down through this major daily resistance and use it as a support for a continuation to our next resistance line. So if the market does something like this, I would then like to enter for a short position on the pullback, somewhere maybe there. Same thing, I like my stop loss to be around 10 to 15 pips, and target the next low, which gives us in 75 pip reward. And this trade is 1 to 4. Honestly, either way, whatever the market decides to do next week, I'll be ready for it. What I'll also like to do is, usually I like to double click on my chart, add an alert, and then just wait for the market to reach that point. Then it will alert me, and then I will keep an eye on, of course, the chart and what's happening, and then from there make a decision whether I'm selling or buying the euro. Also, if you would like to throw in a few indicators just to help you with the confirmation, I like to throw in my smooth moving averages. As you can see here, we are trending below our 200 and the 100, and also the 50 and the 21. So we definitely bearish. There's no doubt about it. So whenever I see something like this, look at this. For example, it broke through the 200 smooth moving average. it gave us a bit of a retest. That could have been a sell, a perfectly sell, scalping between the smooth moving averages, taking it all the way there. Now, if you haven't seen my video about scalping and about my moving averages strategy, I highly recommend you go back to my channel and have a look at it. It's right there, lots of value in it. You can maybe learn something. But yeah, so this is where we're at with EURUSD. I hope you. This is just a quick, nice little support and resistance strategy. I hope you guys liked today's video. Please do leave a like, comment, subscribe, and let me know what you think and what you'd like to see from me in the next video. Thank you guys for watching, and I'll catch you in the next one.